Hi, I'm Doug Mackenzie and welcome to another episode of the Paytech Show. In this episode, we learn more about the ever-changing landscape that is the payments industry. We'll be speaking to Apply Financial, Bank of America Merrill Lynch, and the Lloyds Banking Group to hear from their thought leaders about where it's going in the future. Firstly, I sat down with Mark Bradbury from Apply Financial, who broke down some of the challenges that accompany the payments revolution. What are some of the biggest challenges facing the financial institutions currently?
So financial institutions are facing a number of challenges. One of them is from the ever-growing fintech world, of which we're part of. Secondly is the need to be compliant and make sure that money laundering and fraud and all the other issues they have to deal with on a daily basis are kept in check. And the third thing is that they're living with long in the tooth legacy systems which are very difficult to enhance and replace.
So what is fueling this payments revolution that's going on?
It's a number of things. I think the consumer, whether it be individuals or businesses, are looking for more flexible and intuitive ways of making payments at point of sale or point of entry. In a sense, it's a bit like the iPhone. We didn't know we needed it until we got one. Now we can't live without it. So all the new ways of making payments, contactless, faster payments, all these initiatives have fueled the consumer and corporate interest in payment products. And that puts a lot more pressure on institutions out there to be able to deliver these products.
We posed the same question to Gavin Maclean, Head of Product in Payments at the Lloyds Banking Group.
So this payments revolution that we're seeing, what's fueling that? Is that from the regulation, or is it powered by the underlying technology, or is it just really a big sort of social upheaval towards the digital side?
I think it's a glorious combination of things, Ali. So to use your fuel analogy, I think the fuel for what we're seeing just now is rising client expectations, like I've mentioned. Give me it now, give me it online, give me it any time that I want it, combined with changes in the market and regulation. So definitely things like open banking here in the UK and Payment Services Directive 2 in the EU are the real fuel. I think the accelerant though, or the real big enabler, is the improvements that we're seeing in the technology capability. So as I've mentioned before, the ability to interact with clients and exchange data using application program interfaces and being able to do things, literally 24 hours a day with huge amounts of processing power and horsepower are really opening up the possibilities, and that's what's fueling the significant changes and ultimately improvements that we're seeing for the end users of payment services.
We then asked Bank of America Merrill Lynch why banks are so eager to improve their payment processing.
Well, to be honest, the only reason why banks are looking at it is because of their clients. Clients want their payments to be processed quicker. They want them at a lower cost. They need to be, of course, free from risk. And they like an enormous reach around the globe. They should be able to do payments anywhere. And preferably, they do them in a digitized form. So it's that demand from clients, and it's a continuous demand that forces the banks to improve their payment processing, to do exactly that, to do it faster. That's why we see all these developments towards instant payments, to do them at a low as cost as possible for the client, and to get an enormous reach. So no longer are we just talking about payment processing in a country or in a region, but very much cross-border and globally. And again, those global transactions need to be at a certain cost as well. And that's where there's a lot of focus from the banks or payment service providers or fintech around the payment processing, because that's where a lot of improvement can still take place.
I think they're being forced into doing it, which is not a bad thing, and I think they accept that as being a good thing. The systems that they have in their back offices managing payments in many cases date back to the last century, and they are cumbersome and expensive to run. And because the world of payments has become faster and cheaper, it's difficult for banks to be able to maintain a profitable model with their current back office technology. So that's probably, the cost is probably one of the biggest reasons why they're having to change their payment systems.
Our customer expectations are changing. The way our customers interact with their customers is changing. The need for immediacy, the need for online servicing and digital services is as much of a challenge and opportunity for our customers as it is for us. Now is a really opportune time, taking that combination of increasing customer expectations and a fairly large to-do list on, payment-related change, to upgrade the systems and make sure that we've got the platforms and services in place to support our customers now and into the future.
I just want to expand on the scalability part. I mean, a lot of organisations, particularly of the sort of Lloyds scale, have quite a lot of legacy systems. How do you look to turn that to your advantage and to be able to build on that as quickly as you can in order to deliver the sort of scale that you're going to be required in the next sort of couple of years?
So maintaining payment systems is a bit like painting the Sydney Harbour Bridge, right? It never stops. As soon as you finish, you've got to start again. And you can't shut the thing down. The load will continue to grow. The amount of traffic going over the bridge or through the platform is likely to keep increasing. And that means that you've got to have platforms and systems in place that are able to adapt to those changing client expectations.
So just who is making these solutions? We wanted to find out how many of the incumbents are actually utilising some of these third-party solutions. Ad, you used to work with a fintech. Can you tell us what some of the tangible benefits for the financial institutions when collaborating with a fintech?
Generally, they are more agile and very nimble in their approach and can actually do developments quite quickly. They have no legacy systems and they use everything based on the latest technology, which is a lot easier to them. So that's a big advantage. On the other hand, you've got the banks that bring in, of course, the reach, the client reach, already talking to the right decision makers on the client side, which is often a challenge for the fintechs, is to get to that decision maker. And so it's that combination of the two that is really useful. Then when you're talking about financial transactions, which is what we're talking about here, of course there's a regulatory element, there's a compliance element, there's a risk element. In the end, also for the type of clients that we deal with, other institutions or corporates, risk management and adhering or complying with regulation is key to them as well. So those elements have to be in there in order to make it successful. And it's the combination of the two that is really very interesting. And so the fintech can bring that extra, but actually the bank still brings a lot as well. So in the end, it is about the approach people take, and of course both sides have to. There's some kind of compromise between the two. But if you get the right combination, it'll be more successful in the long run than anything else.
How can Apply Financial help the banks streamline their payment processing systems?
Well, we work with the banks to improve the whole customer experience at the point of input. So that customer could be an individual, it could be a corporate, it could be even somebody who works within the bank who they would class as their customer who's using the technology. But our API is best suited to be put at point of entry. So in the browser application, whether it's on a mobile, desktop or a pad, so that we can validate a bank-to-bank payment as it's being entered, thus removing the need to frantically chase around as the payment's about to go through the gateway because there are some errors in it. And given that faster payments is in the UK is the norm now, and that faster payments is coming all around the world, it would seem to me, and it seems to the banks, a very good idea to validate the payment as it's being entered.
So can you tell me some of the applications Validate will have on trade finance and even commercial banking?
All banking transactions start at a bank account and end at a bank account, whether it's domestic or overseas. And commercial banking and trade finance is exactly the same. It's different message type, but ultimately it ends up in a bank account. So it's really important with the volume of transactions that take place in those areas of banking that a payment is validated. I'll give you an example. For instance, if it was a trade finance deal and the payment are subject to delivery, if you've got a boat full of bananas at a harbour and it's waiting for a payment, it's a perishable good. You wouldn't want the payment to either fail or be delayed because of some errors in the payment, because that would be catastrophic for that shipment of bananas.
Automation is obviously a key part of the industry, and we wanted to find out how it's actually improving the payment revolution.
Automation, removing the need for human intervention, is going to help them drive their costs down and their efficiency. The cost of making transactions now has to come down because the margins being charged to make those transactions have come down, whether it be foreign exchange spreads, whether it be costs of running your back office operations. All those things are being driven down by new entries into the business and by pressure from the consumers.
I remember, again, on the retail side, having to go in and fill out the payment transfer slips in the bank branches and hand them in, and now I can do it with a few clicks on my phone. What positives has automation brought in for the customers when it comes to processing and actioning payments on a variety of scales?
It's important to say that automation, combined with other types of improvements and transformation that we've made, has really led to improvements in the speed, the accuracy and the cycle time with which we can undertake transactions on behalf of our customers. So having the ability to process large amounts of information, and I mean really large amounts of information in a short period of time, allows us to better understand customer needs, it allows us to identify errors, and it allows us to make sure that payment instructions are executed accurately as our customers would expect us to process them. So it's important that automation alone is a positive, but it's a relatively limited set of benefits on its own. It's only when we put it along with the other types of transformation that we're making that we can really unlock the benefit for clients.
I think it's fair to say that trade finance is one of the last areas of our industry that hasn't benefited yet fully from digitization. So there's a huge opportunity to bring trade finance into line with some of the more automated parts of the banking sector. It's important to look at where we are today and then what potential could come in the future. If you look at trade finance today, it's already very well digitized when you compare it with 10, 20, 30 years ago. Most clients are now using online channels. Technology that's not new, for example, optical character recognition, which has been around for many years, has been really well refined to the point where error rates are now very low. Banks are already integrating things like artificial intelligence and robotics for some of those lower end processing tasks. But there's still a lot of potential, clearly. And when you look to the future, it's extremely powerful. Ad was talking about payments. Payments are very automated already. And one of the main drivers for that is there's generally a very small number of parties involved in a payment. So it's easier to drive standardization and schemes that digitize the end-to-end payment flow. Of course, in trade finance, you have many more players, not just the banks and the importers and the exporters, but you also have government, shipping companies, customs authorities, tax authorities. And trade finance is really at the mercy of the least sophisticated actor within that end-to-end payment chain.
Finally, Mark Bradbury discusses how Apply Financial and other similar fintechs are going to shape the future of the payments revolution. So how are Apply Financial going to change the financial industry?
We do it in partnership, so we're not going to do it on our own. But we've been in business 8 years now. For the first 4 years, talking to people about having a fantastic solution in the cloud through an API was being a bit of a heretic, perhaps, maybe not, but difficult. Security, not in-house, difficult decision to make, particularly with banks. We've worked very closely with those banks. We've worked closely with partner companies who sell into the banks, and we managed to get a seed change in their attitude. Cloud is no longer difficult for them. They're moving very much a lot of their operations to cloud because of the cost. APIs, they're embracing it because they can get more functionality into their user interfaces, into their middle and back offices through an API that it could ever do in-house. So the way we're going to change is working together with other partners to deliver solutions that take the need away from the banks to do massive infrastructure or building projects, and also be able to deliver new functionality really fast to their customers. Not over 3, 6, 9 months. Be able to deliver it next month. If they have an idea, why not deliver it next month? You can do that. Look at cloud, look at API. That's the way we're going. And I think we've always been regarded as a company that's at the forefront of the API vanguard.
Thank you for watching, and look out for the next episode of the Paytech Show.